Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. It's Monday morning. You know what that means? It's our news break. It's our podcast style. We're going to pick four major news stories from this past week. We're going to talk about them, have some fun, just share some very high-level thoughts on them. So get ready. We're going to talk about the market, Mr. Buffett, and two other major companies announcing some big news.
Smash that subscribe button. Give us a nice thumbs up. Welcome back to the Diplomat channel, guys. Podcast-esque episode coming right at you. Pretty volatile week. Bert, the first one really coming in hot and heavy with that jobs report and really sent the market shaking. Saw a lot of red this week, and we have so the last few weeks. U.S. economy added fewer jobs than what was anticipated at about 114,000, right?
Yeah, and that sent everything into chaos because it was yet another indicator that the job market might, not just the job market, the economy might be slowing down. There have been several data points over the last few weeks. This was just another one, another cherry on top, another data point. So what happened? Friday was chaos. Let's start market first before we talk interest rates. Dow was down 1.5%. It's below 40,000 again. S&P 500 is down 1.84%, below about 53,500. The NASDAQ was down 2.43%. So it's below 17,000. Tech stocks were hammered, but it wasn't just tech stocks. The broader market was just pummeled on Friday.
Yeah, I mean, everything again was getting pummeled, and you'll see all rates kind of dropping heavily right now. Obviously, there are quite a bit of things, what's the best way to say it, that are going to be setting future expectations. I think everybody is a little too high in the speculation, if I can say so myself. But chances are we do get that first Federal Reserve rate cut here come September of 2024. But some people are wild and pricing in like five rate cuts before the end of the year. And I'm like,
Yeah.
what?
So
What?
they've gone from what, zero in the last year to five, one every month, two in a month. Like, yeah, I'm with you. It's getting a little crazy, but it has caused chaos in the interest rate market. They said mortgage rates are at the lowest level since April 2023, which is still very high. So there's still a ton of us that have our 3%, 3.5% mortgages where they're not touching, but it's in what, the low sixes now. I saw some 6.3% just the overall. It is getting low, Lanny, so maybe it's going to move some buyers and sellers off the sideline and hopefully spark things in the housing market.
Yeah, naturally it should. But if you guys take a look at the CME Group's FOMC expectations, though, just to keep talking about it,
Mhm.
literally there's a percentage of a chance that some analysts out there are setting expectations that we could be in the 375 to 400 basis point range on the target rate. We're currently in that 525 to 550. So you're talking like just completely decimating the rate before the end of the year, which, I think is highly unlikely. You know, could we see two cuts by the end of the year?
Maybe.
Sure. Can we
Yes.
see five?
Yeah.
No.
It,
Now, hey, if we're wrong, come back to this video to let us know in the
yeah, it
comments.
reminds me of those like infomercials or those things where it's like this one person predicted the dot-com bubble 3 weeks before everybody else. So buy his course on why he thinks the Fed's going to drop rates 5 times before the end of the year. It's like it sounds like one of those, but something is
Exactly.
going on, right? Overall, we'll say something is happening. Things are cooling down. You're starting to see it in the economy. It's not just, they're not the only company that said consumer. This isn't the only thing saying it. A lot of companies have talked about slowdowns from consumer spending. A lot of people have talked about earnings being impacted, guidance softening. So, yet another data point with this jobs report shows things are slowing down, which sent the market and interest rates tumbling.
Exactly. We'll have to see, yeah, what happens in the real estate market here going forward. But Bert, your boy, our boy, Mr. Warren Buffett himself had a little bit of a buffet doing
Mhm.
a little trimming lately, guys. What was the big news, which isn't earth shattering here,
No.
guys, and everybody just needs to turn off this noise, but it's news nonetheless. Buffett trimmed a position, huh, Bert?
Yeah, not just any position, his largest position. He's owned Apple forever. Everyone talks about how Buffett and Apple was sitting on an unrealized gain. Well, half of it is no longer unrealized. He moved it into the realized section, and Warren Buffett trimmed his position by about 50% in Apple. And people figured this one out through just reading his recent release. At the end of Q1, his Apple position was about 135 billion. End of Q2, 84.2 billion. That's what they're saying. They're suggesting that Berkshire Hathaway has slashed about 400 million shares of Apple. Or no, they now own about 400 million, down from 789. So that's where they're saying it's about a 49 to 50% reduction in the overall Apple position. And
Hey, took something off the table. His concentration might have been getting too high. They have their reasons.
yeah,
Probably not because they don't like
no,
Apple, because hey, they're still holding on
400
to
million
about
shares.
400 million shares. So
Yeah. I mean, also look at the last month. What have we talked about? Tech stocks getting hammered, the market slowing down, people are pulling back. Maybe Buffett was just right on this one to get out, take some money off the top with Apple, while it was at the all-time highs, and just hoard some cash, earn 5% in a money market account.
no, yeah, I mean, hands down, I think nothing to fret about with Warren. Um,
No. Of note, the only other of note one was they trimmed positions in US Bank and Bank of America. That's just moving things in and out of the portfolio. So nothing too fancy going on
yeah,
here.
he's done that with banks quite a bit over his
Yeah.
time period, moving in and out of certain banks.
Mhm.
But when you talk about banks and banking, you got to talk about big oil, Bert.
Yeah, it's an excellent segue here. This one was just more of a story that I thought was interesting that another company is moving its headquarters out of California over to Texas. Um, Chevron is the most recent. They've been headquartered in California for 140 years, and they're moving it over to Texas. And you've seen people, for whatever reason, I've seen a lot of companies moving from California because of cost, because of overly burdensome regulations, and all that's cited as Chevron as usual. So you've seen what Tesla, all of Elon's company, you've seen a lot of other tech companies, a lot of other big oil companies have been headquartered in California, moved to Texas. What I thought was interesting in here, Lanny, I didn't realize this. Um, I didn't obviously didn't know this because we live in Ohio. We don't live in California. Um,
You don't.
California, yeah, one of the new laws that they had passed was to work on keeping refineries from gouging prices or like taking advantage of consumers by controlling the market for pricing. So they called it a $4 billion margin penalty assessed and paid because on Chevron because were it's just a new tax to put on refiners to stop them from gouging consumers. And it's a weird bill. I don't really know much about it outside of that. So anyone who knows a little bit more about these California regulations, let us know. It just really caught my eye of just sometimes your downside of regulations and what could happen. And you have Texas, which has significantly less regulations and much more business friendly than California. So easy. File the paperwork, transfer your headquarters here, and save a
Exactly.
boatload on penalties and taxes.
California better take note. You might be losing not just a lot of residents, but a lot of businesses then if you keep having people in companies paying higher taxes, higher fees. You're going to lose a lot of revenue. It's going to be a tough place to continue to live and build businesses in California.
Yeah, that's right. So anyone too, let us know if you know more about these California rules. Also, if you're a resident of California, love your opinion on what's going on there. If you're seeing this with your own eyes too, help us out on the ground level, see what is going on.
Exactly. Now, Bert, so we talked about, the, jobs report, talked about Buffett trimming the Apple stock position, talked about Chevron moving from Cali, soon to be in Texas. To get back onto the tech side, a lot of tech conversation here. What stock dropped about 7% after, what was it, beating earnings?
Yeah, Amazon ticker symbol AMZN. This was by far the funniest. They beat earnings and they missed on revenue, but didn't miss on revenue. It still grew. It still grew 10%. Revenue was still ungodly amounts. It was just 760 million below estimates and what management was expecting. So I guess 148 billion wasn't enough. They needed that 148 point.
which is just a decimal point right now for Amazon.
Yeah,
And
which is wild enough in itself. So they still earned a
right.
profit. They still owned $1.26 per share. It was up from 65 cents in the prior quarter, and it beat expectations on the bottom line. So
So Amazon's still a dominator,
yeah,
still a killer out there in the marketplace, guys.
yeah.
Stay tuned for Thursday's video because Amazon just may be making that video as well.
Ooh, I dig it. I dig it. But what else was in there? AWS is destroying it. So everyone focuses on the Prime, the shopping, the consumer retail side of it, Amazon Video. Let's not forget AWS. So many businesses depend on AWS and their servers, their storage, and so much of the back end tech lives in AWS. So it's up 19%. You get those companies suckered in there and you don't leave Amazon. It's too hard for your business to untangle the web that Amazon puts you. And it's really, it is something else.
I I mean, I know many third parties that we rely on at work,
Mhm.
their systems are primarily based off of an
Yep.
AWS platform. So, yeah, once they get you there. So that's
Yeah.
Amazon growing at 19% in the AWS. Again, they're still projecting sales closer to 160 billion still. So it's
Yeah. They're
stupid to
fine.
even talk about this. Just from a like these numbers are just ungodly at this
Yeah.
point.
And it's funny that they dropped 7%. It really makes you think, are they a stock to buy? Are they something to consider for an Amazon? But we'll keep that in our head, save it for a later date. But it was newsworthy enough, and we had to make sure we covered it on Monday after that earnings on Friday.
Yeah, let us know if this news impacted your stock portfolio, your net worth, and your, hey, future stocks to buy as well. So let us know in the comments. Let us know again if you guys are watching this on YouTube or on YouTube Music. Curious on how their podcast section is doing here on for Google, for Alphabet, and for just, you guys, the listeners as well.
Yeah, if you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, we'll change it up. Yeet, 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 yeet. All right, we'll throw it out there, guys.
All right, guys. We'll catch you guys on the next episode. And, that was Bert the Hurt and Lanny from the DD over and out.